Hello guys, welcome back to another video today, and what I'm going to be breaking down to you today is the break and retest trading strategy. Now, a few of you might have heard of this strategy. If you're a new trader, you might not have, but it's a fantastic strategy for you guys to practice because I primarily use this strategy in my trading outside of YouTube, and I really want to teach you guys it today because it is a powerful strategy. And what I would say is, after seeing this video, if you're not familiar with this strategy, go off and back test it on a demo first before you use it in your live trades, because you might be able to personalize it, put your own spin on it to make it that more credible for you. Because I can teach you a strategy, but you got to remember this strategy is good for me. Okay, in trading you have to be comfortable with a strategy that's good for you. Okay, so let's get into this today. So what do I mean by break and retest? So apart from the recap at the end, most of this video will be visual learning. I feel with teaching strategies, seeing the action happen, you're going to learn more rather than me jotting down a load of bullet points and trying to drill it into your mind. Yeah, seeing live charts, seeing it happening, it's going to make you learn better. All right. So we got a USDCAD daily chart right here. All right. So rule number one of this strategy is, what do we have to do first? That's right, we got to identify where market momentum is, and in this current chart it is bearish. Now this chart is up to date. I think I pulled this image off of TradingView yesterday. Yes, October 26th. So I pulled it off of TradingView yesterday. So this might be a little bit behind. Maybe this bullish candlestick that we're seeing live now has completed, and it's on another one now, but it's as up to date as I could make it. So rule number one, we've identified the trend. Market momentum is bearish. Yeah. Step number two is we want to identify a level of support. Now, you may be asking, why are we looking for support? Well, because market momentum is bearish, it's going down. Yes, we want to look for a level of support. If market momentum was bullish and going up, we'd want to look for a level of resistance for this strategy. Because remember, we're trading with the trend. We want to go with that momentum. Yeah. If you haven't seen my video on support and resistance, I think it's literally the first video I ever made. So go and have a watch of that, and you'll understand this support level a bit better. All right. So I've identified this level of support here for our bearish market. So now we want to identify, is this a strong support zone? Yeah, can we rely on it? So what we've got one rest, we've got two rests, and we've got three rests of that support zone. So what does that tell us? It tells us it's a strong support zone. Okay. So far we've got three confluences just by looking at that chart, drawing a few lines. We've got a bearish market. We've identified a level of support, and we've also identified that level of support as a strong zone. Yeah. So golden rule number one, guys. Regardless whether you're doing this strategy, you should be doing this anyway. With any strategy you do, is always identify the overall trend on the higher time frames. Get that bigger picture knowledge. All right. Even if you don't necessarily need to know where the market trend is going, it's good to have something in the back of your mind if you're trading maybe the lower time frames, saying, look, I know the long run this market is going down, so I really want to avoid maybe buying as much. Yeah, I'm going to show you why in the next slide, why the bigger picture is very important. So this exact same chart, it's on the 30-minute time frame though. Yeah, as you can see up here, it's on the 30-minute. So what is this market telling us? It's telling us market momentum is what, guys? It's saying it's bullish, yeah, which is completely different to the message we get from the daily chart, which is bearish. Yeah. So this is why you got to be careful, because if you'd probably be looking for buys here where it could be very dangerous for you. You could be stopped out straight away, and you're like, well, why did I get stopped out? When all you had to do was look at the bigger picture and realize, okay, that's why I got stopped out, because the momentum is not in my favor at the moment for the 30-minute time frame. So remember, that bigger picture gives you the overall market direction for the long term. Yeah, always remember that. Don't get me wrong, I'm not saying don't buy after seeing this 30-minute time frame. I'm just saying, make sure you look at the higher time frames, because if you do get stopped out, or a massive move happens against you, you know why. Okay, you're not like confused as to why. So if you journal your trades, you can write in your notes, traded against a trend long term, got stopped out. Yeah, you know not to do that next time. All right. So back to the daily chart. So what now are we looking for? So we've got 3 confluences so far. We've got bearish market, we've got a level of support. We've also identified that support zone as a strong zone, yeah, based on prior market structure. So what's the 4th confluence we're looking for? So we're looking for a potential break of that support zone to get us interested in the setup. All right. So as I said, if this market was bullish and we were looking at maybe a buy, we'd look for a break of a resistance zone, yeah, and we'd map out that resistance zone at the top somewhere. All right. So yeah, so we're looking for a potential break of our support zone here to get us interested in the setup, because remember, what trades are we looking for this particular setup? We're interested in selling, guys. Yeah, remember that. It's, if market's going down, we're interested in sells. Market's going up, we're interested in buys. Yes, that's simple. Go with that momentum, because that's where the pips are, and that's where you're most likely to come out of trades with a win. So we're going to fast forward this chart just a little bit, okay? So remember how price does not necessarily sit on a certain price. So what I mean here, market price. Yeah, this little bit here. It doesn't necessarily sit on a certain price. It rests around a specific what, guys? Now, if you watch my videos, you'll know the answer to this. It sits around a specific zone, okay? You can see I've mapped out both here, because my level, you can see with this black line, was good until this sort of mumbo jumbo happened over here. However, I mapped out a zone. The reason I did this, because, so ignore these last 2 red candles. The reason I did this was because price was still hovering around, this sort of level. So I now knew that it was time to get rid of the level and maybe pop in a zone for more confluence, yeah? So basically, the reason I put a zone in is because if a break did happen, I know it's now broken my level and my zone. So that's a strong indicator for me that the bearish momentum is still there and it is still strong, okay? So what do we have here? We have a break of that level and the zone, okay? Now we're interested in this trade. We want to be watching it. But we don't enter yet, okay? We've seen what, guys? We've seen a break, all right? What we haven't seen yet is any sort of retest, all right? And we're going to go over that now. So what confluences do we have so far? So we've seen a clear downtrend. Market has been downtrending for some time now, coming up to around 5 months. We know it's a strong momentum in the bearish direction. We have very little to no sign of bullish momentum or a bullish takeover or a reversal, any sort. We haven't seen any sort of that. We've got a strong support zone. We've got 3 rests of that support zone, which makes it strong, makes it credible. And we've now had a break of that strong support zone. So what does this mean? We've still got strong bearish momentum all the way up to date to where I showed you the last chart, yeah? So we know the bearish momentum's still there. We're still looking for that sell. So what's next? Now, our next interest in this setup will be in the retest of that support zone. Because remember, we've got a break, we haven't got the retest, yeah? And this is called the break and retest strategy, all right? So we're looking for a retest of that support zone as new resistance, all right? So let me just go back here. So this support zone got broken. So we're looking for price to come down and retest it as resistance, all right? I'll show you some examples. Right. Is that a good enough break for you guys? A good enough break and retest? See, for some of you it might be. For me, no. Because remember what I said about zones, guys. You can still see, price, yeah, it dipped a little bit, yeah. However, it didn't, it's still hovering around that zone, in that area, all right? And we can still count that as sort of consolidation. So we want to wait for a clearer break just to be, confident in the trade because for me that's not a clear enough break. I want to see at least 3, at least a clear break. We can clearly identify, there's a lot of white between the candles and the zone, so we know it's clearly gone away from our zone before retesting, and that's better confluence for us, okay? Because there's still, you could still count this as consolidation. You don't know what's going to happen yet. And this is what I'm talking about here, guys. Yeah, look at that. That's clear break. Yeah, clear as day. Break of support. You see you've got multiple candlesticks here, yeah, on the daily chart, and we got a lot of white space between the candles and our support zone. That is a clear break and a clear what? We've now got our retest, yeah? But is that enough confluence? Not just yet. So we're still waiting for that 5th confluence, which is we want to see some rejections of that new resistance zone. Now, why do we wait for more rejections? Because a further 2 or 3 rejections of our new resistance zone shows us that the bulls are still weak, yeah, and they can't push through that new resistance zone, yeah. So it now becomes a strong resistance zone, yeah. And it also tells us the bears are still in control of this market, yeah. So with that in mind, we would now enter this trade, and we have our multiple rejections. You can see we've got 1, 2, 3, 4. We got 5 rejections. So you could enter off the 2nd or 3rd rejection of that level, yeah. And remember, guys, you see how price, you see the wicks here pushed up, it closed below our level. Yeah, that's why sometimes drawing a level and a zone is very important, because you get a lot of information from it. All right. So we've got our 2, 3, 4, 5 rejections here. We want to look to enter this trade. Yeah. And if you haven't seen my video on sniping entries, this is where I would probably use a sniper entry. I'd scroll down to the lower time frames, try and get as much of a pinpoint entry as I possibly could, because obviously entering on the daily time frame, you might not get as good an entry as you would on the, 15 minute, 30 minute, 5 minute, or whatever. Because remember, risk to reward here, we want to minimize our stop, maximize our gain, okay? So in this sort of market condition, we want to, maybe set our stop just above the zone here, because we know it's a strong zone, and we know we're in a bearish market. If price pushes through this zone, where's my mouse gone? There we go. If it pushes through this zone, we now know there's now bullish momentum. We want to get out of that trade with a minimal loss. That's why I say put it just above. Yeah, give it some leeway. But you got enough information off that stop to safely say, yeah, okay, cool, I'm out safely. Market's gone against me. Yeah. So it was a successful trade. All right, as you can see, based off of our confluences. Yeah. So that was our entry point on the 2nd, 3rd, or 4th rejection. Cha-ching. Yeah, that money is now yours, because remember, this is daily chart. That's a lot of pips there. Now we're going to calculate how many pips will that have been. Yeah, look at that, 250.6 pips won. Yeah, incredibly powerful strategy. I've done this stop on daily, and I also had a look at it on the 30-minute, I do believe, and this was the most viable level to put our stop. 45.2 pips, not bad at all. What we want to avoid is doing like 100, 200 pips, yeah? So we got a 1 to 5 risk to reward here, and it came in trumps there. Remember, if you do lot sizes and manage your risk properly, you can risk pennies, gain pounds. Yeah, remember that. So we've won 250.6 pips from using that break and retest strategy, trading with the trend, waiting for the break of support, waiting for the retest as new resistance, waiting for 2 or 3 rejects of that new resistance zone, and now market has continued down in the direction we wanted to. So personally, this is where my take profit would have been. So I'd still be in this trade. So I would write it down to the most recent level of support, which is here, this lower low. But guys, that's a personal preference. If you're happy with 250 pips, I mean, I probably would be as well. I'll probably see this pullback on this bullish candle, and I'll be like, okay, I'll come out as well. Even after this loads of price here, or this price action, I probably would have trailed my stop loss to this new level here anyway. So I probably would have been taken out with a nice amount of pips bagged for that trade. But that's personal preference, guys. So a little recap. So what do we got to do first for this break and retest strategy? Got to identify the trend on the higher time frame, get that bigger picture knowledge, and then what we got to do is map out the strong zones or strongest zones of price structure. So use previous price action to help you. Make sure if you can't see anything obvious on, opening the chart as a default, just zoom out of that chart, and sooner or later you're going to find a prior level of structure. Whether if you don't see one on the daily time frame, go down to the 4 hour and see if you can get some sort of structure to go off of and draw your zones. Yeah. So you want to look for a break of your zone. Remember, if it's a bullish market, you want to look for a break of a resistance zone. If it's a bearish market, you want to look for a break of a support zone. Okay. So remember that price doesn't always sit at a specific price. Okay. It sits at more of a zone. So use both lines and rectangles to map out your zones. Okay. As you've just seen in my example, both the level and the zone help me out with information. So wait patiently for a clear break and retest. All right. So remember, don't rush into anything. Don't wait for a tiny little break and retest. Wait for that big break and retest. It gives you a lot more confidence to enter. All right, guys. Generally, if say for example we're in a bullish market and price breaks a strong level of resistance, chances are it's going to break and retest that zone, all right, before heading up. And it's the same with a bearish market. If it breaks a strong level of support, chances are it's going to be pulled back to that level of support as new resistance and carry on down after that, all right? So wait a little more for 2 or 3 rejections at the new level of support or resistance you've mapped out, yeah? So as I showed you, we had, I think it was 5 rejections of our new resistance level, and then that was confluence for us to enter, yeah? So you want to put your stop just below or above your zone, or above or below a prior level of structure you've mapped out on the lower time frames. Now I've said above or below because it's exactly the same method for bullish or bearish markets. So if it's a bearish market, you want to put your stop above, just above your new resistance zone, prior support zone. And if it's a bullish market, you want to put your stop loss just below your new support zone, prior resistance zone. All right, because if if price breaks your zone upon that retest, the momentum is now not in the direction you thought it was, and you can come out with a minimal stop. All right, and you don't have to worry about it. All right, but if price carries on, which chances are it probably will, you've bagged a lot of pips, you gain in pounds. Yeah, guys, remember, even if you lose a few of these trades, don't worry about it, because again, remember what I said about risk management. If you're doing like a 1 to 3 risk, you can lose 2 of these trades, win 1, and you're up a %. All right, so don't worry if you lose trades. Everyone loses trades. This strategy isn't 100%. All right, but what we're using is confluence, over and over to support our entry. That is literally it. That's all you can do in the markets. You're not going to win 100% of the trades. If you do, you're some sort of robot. But even robots don't win 100% of trades. All right. So guys, you got any questions about that strategy or want me to break any more of it down for you? Leave a comment down below, or simply email me at andrew_96@gmail.com, and I'll get back to you. And yeah, I hope you guys have a fantastic week. Good luck with any trades you take. And I will see you in the next video. Oh, if you use this strategy after seeing this video, let me know, because I'd love to see your setups and if you won any trades with it. All right, take it easy, guys, and I'll see you in the next video.